How to maximize your marketing agency's profit margins. What's up, everybody? My name is Chris Hervochon, CPA. The website is betterwaycpa.com. And today I'm going to discuss with you what is gross margin, what is net margin. Those two things are not the same thing. What are the average margins for marketing agencies? How have margins trended over time? So what sort of trends are we seeing? And then finally, what are some ways that you can increase the margins in your agency? So let's get started. What is gross margin? Gross margin can either be shown as a dollar figure, so a nominal figure, or a percentage. So if we're going to talk about the nominal figure, it is gross revenue minus variable expenses. That gets you to gross margin, or gross profit as it's sometimes called. If you take gross profit, you divide that into gross revenue, what you're going to end up with is that gross margin percentage. Okay, so you can either show it as a nominal figure, which is dollars, or you can show it as a percentage. Either one, doesn't matter as long as you're measuring it. So variable expenses, a couple things you could, or a couple ways that you can hear those referred to: direct costs, cost of goods sold, unit costs, selling expenses, cost of sales, all the same thing, all variable expenses. Variable expenses basically just means that for every new dollar of revenue that you're going to generate, what are the expenses that are associated with that? So expenses that would not otherwise have been incurred or have existed if not for that generation of that revenue. Pretty simple, right? So what we want to know is, if I'm going to go sell another dollar of advertising revenue or another dollar of some sort of a marketing service, how much of that am I going to get back in the form of margin, not including all the fixed costs? Okay. And one of the really important things to think about when you're calculating gross profit or gross margin is this is going to be totally impacted by the way that you set up your accounting system and your chart of accounts. Your chart of accounts is going to be totally key to getting you to a good gross margin number. You want to make sure that everything that's above the line, meaning everything that flows into gross margin, is going to be variable. So I totally recommend working with a good CPA or a good accountant to help you figure that out. And that's something that you need to be mindful of, because we're going to talk about net margin now. Net margin is never going to vary, right? It's essentially just your net income. Like gross margin, this can be nominal, so dollars, or it can be a percentage as well. But this is going to encapsulate all of your expenses. So it's gross revenue minus all of your expenses is going to get you down to that net number. If everything's included, that means that net is always going to be the same no matter how you set up your chart of accounts. What's going to change is when we think about gross margin and what accounts in your chart of accounts in your accounting system are going to flow into that number. So gross margin can be changed by the chart of accounts, net margin cannot. So this is all expenses. In other words, this is both variable and fixed. Pretty easy, right? If we're going to talk about the percentage calculation, what we're going to do is we're just going to take net income or net margin and then divide that into gross revenue. And what that's going to give us is the percentage or the dollar amount that falls to the bottom line. So what can you effectively take out of the business? And generally, this is going to be pre-tax, because when we're doing benchmarking and things like that, tax structures change from business to business. So we want to do apples to apples, right? So average margins for marketing agencies, and this is probably why you're tuning into this show. This data comes straight out of ProfitSense. ProfitSense is the largest private company data source for financials. And what they do is they do it by NAICS code. So when you file a tax return, you have to provide a code which says what type of business you're in. And there's all sorts of other reasons why you need an NAICS code, but it just makes sure that businesses are apples to apples. So advertising agencies are 54181. Accounting firms have a different number. And it's basically just a way to, to lump companies together in a single industry. Okay, but anyway, so this comes from ProfitSense. This is a subscription service that I subscribe to, and you'll see the two highlighted lines here: gross profit margin, net profit margin. You'll see that 2017, 63% for gross, 7% for net. 2018, we saw gross profit decline by about 4 points, so 59%. And we saw net profit margin actually increase by 1.5 points. So what that tells us is maybe there are lower fees, but the cost structure of the cost controls industry-wide have improved. So that's why you'd see the net go up and the gross go down. We see for the last 12 months, gross profit relatively flat, and the net profit margin has increased up to about 12%. So if we look at the last 5 years, the average is 8.33%. You see that toward the bottom right there. For the net, and now what we're seeing is 11.7, so we're seeing the net profit margin grow. This is just profit cents. This is one data source. Okay, they have their own set of company financials that they pull from. They're largely pulling from users of QuickBooks, Xero, and I believe NetSuite. So accountants purchase this service, and I guess private companies too, in order to pull their financials into it. That's how they aggregate this data, and then also to provide benchmarking and projections for the accounting firm's clients, which is what I'm doing for you on this video right now. So that's kind of where the data source comes from. If you look at these numbers and percentages toward the top here, it'll tell you how many companies are actually in that data source. So last 5 years, we've got roughly 2,000 companies, gross profit margin of around 64%, net profit margin of 8%. And that's, I think, pretty consistent with some of the other data sources that you'll see across the industry if you were to pull this data. Now, comparatively, these are the average margins for marketing agencies from RMA data. And the Profit Sense used to provide RMA with their data. RMA now compiles their own data. These are different data sources. These are different company populations, and so they're different, right? And one of the things that you'll see from this is it says the year end 3/31/18, whereas Profit Sense back here, these are calendar years or last 12 months in the case of this left-hand column. So we have to keep in mind that these are different periods, okay? So the data is going to be different, yes, but they're also covering different periods, and then that's going to affect the number. So gross profit here, they have it 100%. Basically what they're saying with this data source, the RMA data source, is there's nothing that goes into the margin, okay? So what they have elected to do is just say every gross margin is going to, by agency, is going to be calculated differently. We're not even going to take a stab at this. We're just going to put everything in this data set into operating expenses. So in other words, fixed expenses. So really what we need to look at here when we're going to compare RMA to Profit Sense is the profit before taxes. This is your net margin. You'll see it's trended down from 7.2% in 2014 down to 6.6% in 2018. So about a point lower, half point lower. You see 2015, 12.2%. It's almost half of that in 2018. So what we're seeing is that the net margin for marketing agencies based on the RMA data is trending lower. If we look back at Profit Sense, the net margin we're seeing actually trend higher. So there's a discrepancy there. But again, these are different companies. These are different data sources, different populations of companies, and the periods that these cover are also different. Okay. So how have margins trended over time? And I'm going to cite IBIS. IBIS puts together market research for different industries by NAICS code again. So this is 54181, advertising agencies. And this is directly from their most recent report, which was actually back in March. And I quote, despite high revenue growth, profit margins have declined over the past 5 years to 7.6% in 2019, down from 8.7% in 2014. And what I will tell you is that IBIS also cites RMA data when they put together their reports and show their ratios and metrics and things of that nature. So generally what we're seeing in the agency space is higher revenue, due to higher pricing mostly, and lower margins. So costs are increasing essentially. So ways to increase your margins. Again, higher prices. Per IBIS, prices of services are generally increasing across the agency space. This flows into the next bullet point, which is specialized tools to track outcomes. And again, I'm going to quote IBIS here. Advertisers that develop tools for measuring tangible results, such as how an advertisement affects consumer purchasing behavior, or provide services to profitable firms, such as the financial sector, will have higher profit margins. So what does that mean? That means, and I've talked about this in other videos and on blog posts and Quora posts and things like that. But what this means is that you need to be tracking the value that you are providing to your clients, and then you need to be pricing your services based on that. So your client needs to get an ROI, yes, but you need to get an ROI too, because if you are providing significant value to your clients and your customers, then you need to be charging a significant price. Makes sense, right? What this also is saying is that you want to be servicing industries that are profitable. That sounds like common sense, but it's something to keep in mind. You don't need to onboard every single client who calls you or sends you a Facebook message. What you need to do is have a due diligence process that is robust. You need to identify profitable clients, because the profitable clients will be able to pay you, and they'll be able to pay you that high fee that you need to be charging for that huge value that you are driving. And they're going to tend to be the stickier clients, right? They're going to be around. You're not afraid of them going out of business. The third bullet point here, increased automation. That's going to help to drive your fixed and variable costs lower, hopefully. There's a lot that's happening right now in the marketing space with automation, AI. I did a video on that a little while back. I suggest you check that out. But increased automation is certainly something that is coming, and it's also a way to drive down your costs and therefore make you more profitable. And then finally, keep a close eye on expenses and look to eliminate anything that doesn't help drive revenue. If it doesn't help drive revenue, you really don't need it. That does not mean that you need to be cutting employee benefits because they don't drive revenue. Not true. Your employees help drive revenue. One of the costs of having employees is to give them good benefits, right? You want to make sure that they are happy where they work. You want to make sure that they are well compensated, and you want to make sure that they are going to stay. If they do good work, you definitely want them to stay. So something like health benefits, that's not the kind of thing that I'm talking about here. I'm talking about the unnecessary software license that you have that you don't use to deliver any sort of service to your client, that you don't use to manage your business itself, you're just paying for because you bought it one time and you haven't canceled it yet. That's the kind of stuff that I'm talking about. It's like that Seinfeld episode where they try to quit the gym. It's exactly like that. If you've got expenses in your firm, if you've got an office space that you just don't need, where the rent is too high, things like that, you need to be cutting those expenses. That will in turn make you more profitable. Okay, so final thoughts. Be thoughtful about your chart of accounts. So that's how your actual accounts are set up in your accounting software. This is going to determine your gross margin. Net margin, like I said before, will end up the same no matter which accounts you include in gross margin, but gross margin is an important thing to track so you know how much of every dollar of revenue that you generate is going to come back into the business. Number two, benchmarking is meant to be informative, but it is not an end-all be-all. And then use consistent data sources. I think I've showed you pretty conclusively. Data sources are going to differ, especially when you're talking about surveys of companies and things of that nature. They're different data sources. They're tracked differently. They're measured differently. But the one thing that, and they are informative, don't get me wrong, but the one thing that you want to be sure of, if you're making decisions and benchmarking yourself off of those data sources, you want to make sure that they're consistent. So use a consistent data source. That's going to help you be more informed and also more consistent. And then number three, there are a number of ways to make your agency more profitable. I just showed you that slide of all the different ways that you can increase your margins. Pay attention to the data within your company and also within your industry, and work with professionals who will help you make the most of that informational power. So what that means is find somebody who can give you that data or help you compile that data, somebody who can tell the story of what that data is telling you, and somebody who can help you make strategic decisions based on that data. Data is the new currency. Okay, the more data you have, the better your ability to make strategic decisions that are data driven, the more profitable you're going to be, and the more competitive advantage you are going to develop. That goes back to what I just talked about, pricing, developing tools that help to quantify your value to your clients. Same thing, okay? That is information, that is power, that is something that you can use to drive your margins higher. Okay, resources for today. I will link to this show on the slides. The slides are going to be out on Google Slides and also on SlideShare. Here's a link to the marketing agency sample Wayfinder. If you haven't seen that, please check it out. It's pretty cool. It talks about benchmarking. It talks about KPI development, how to make your business better. The IBIS report that I referenced in this video, there's a link to that. Full disclosure, you do have to pay for it. It is expensive, but it is good information, and I do publish them quarterly. There's a YouTube link to a video that I did a few weeks back, metrics marketing agencies should track to communicate their value. That gets back to pricing based on value. How much value are you delivering for your client, and you need to get paid for that. There's a Quora article here that I wrote a while back. I need help in starting my digital marketing agency. What are the best things to note? That Quora blog, that Quora post also talks about benchmarking and how to get value out of your agency and some of the things you need to think about that I also covered in this video. And then finally, there's a really good blog post that I found from Report Garden. The title of it, This Agency Maintains 2x Average Profit Margins with 70 Highly Paid Employees. It talks about a lot of interesting things that I covered in this video, but also, niching and how to control costs and what to think about when hiring. There's a lot of good links within that blog post, so I definitely think you should go check it out. That is it for me. Let's connect. Chris@betterwaycpa.com. 843-608-0298 is the phone number. You can find me on Facebook, LinkedIn, Twitter, Quora, Pinterest, and Instagram, so pretty much everywhere. If you like this video, please like it and please share it. Please subscribe to my channel. That helps me to build my audience, and liking and sharing also helps me to figure out what it is that you like for me to talk about. So it helps to inform the content that I will produce in the future. If you have any questions, please comment below. I'm happy to go back and answer any questions that you may have. That's it for me today. Thank you so much, and I will see you next time.